as Drake reminded me this morning, like, because I'm asking the question on 4 to 5 cuts, that's actually already priced in too, right? It's not just the 3 cuts. What I mean is 3 cuts this year, right? I mean, 4 to 5, you go into next year, there's rate cuts into next year. So it was quite a move. It was a move that was in line with what happens in Quad 4. It was a move that we front ran, through the lens of utilities, gold, long bonds, et cetera. But again, I listening to different, kind of voices out there that people think matter on this. I mean, it's almost like a layup every time. Every time the economy's slowing, they think that that's just good for big cap tech. I mean, the part that they have wrong on that, Steiner, is that it's good for big cap tech if the economy is slowing in Quad 3, right? In Quad 4, it's much more dangerous, and it's going to be what it's going to be. I mean, we're going to have to see from signal to quad how it works out. Like I said this morning, NVIDIA's back to bullish trend. I mean, it spent half a day bearish trend, and it's back to bullish trend, but it's also signaling lower highs. It's also below its medium-term trade level of resistance, which is around 120, 121. And without that stock, the whole thing's shot, right? I mean, because Microsoft's broken now. So, and Apple still has to report reality. So we have a very interesting setup. It's us versus them all the time, but them, that's their only option, right? It's to just keep owning what they've owned. And they certainly don't own utilities, or maybe some own some healthcare, but I find today to be particularly important in terms of what they'll do. They'll chase tech again because Meta's up, and I guess a timely and topical time to be having our mid-quarter update call next week.
Obviously, no cut was expected at the meeting. No cut was delivered. With respect to expectations, the bond market clearly moved a bit incrementally further in terms of expectations on forward cuts. The September odds of a 50 basis point cut rose roughly by 2% from 11.8 to 13.5%. So 86.5% likelihood of 1/4 point cut, 13.5% likelihood of 50 basis point cut. And that shift in probabilities basically followed down the line at future meetings. I think, as we've laid out and as we'll lay out in the call next week, you're basically in this sort of window of time here for the next for a few months or so, where this disinflationary expectation is sort of going to be building as reflected in bond market expectations before we think you get into late 24 and going into Q1 25. You see a lot of the similar reversal dynamics that played out in the previous year. So remember, we came into 24 with the bond market pricing in 6 rate cuts. By April of 24, that had been cut down to basically 0 or 1. And then, here we are sort of putting them back on the table. I would think that's going to follow a fairly similar path for, a variety of reasons that we have laid out. We'll detail more fully next week. So, yeah.
What we're trying to say as clearly as we can is that they were going to price in 3, now they have, and that as the data, in particular, the inflation data for August that gets reported right before the Fed meeting, they might go to 5 or 6 instead of 4 or 5. I mean, that would be take the 2-year yield exactly right back to where it came from.
There's a lot of cross currents and overlays and different dynamics, right? You've got base effects, you've got seasonal adjustment distortions, you've got, obviously the overlays around, both the growth and labor side. You've got, the geopolitical elements on the energy side. There's a lot of moving pieces. And I think if you have a proper framework and handle on how they all sort of work together and fit probabilistically, I think it gives you quite a significant advantage in understanding, not just sort of what's going on, but why it's happening, and more importantly, where probabilistically it's headed. So, yeah, I think we've got a very strong framework, and I'd argue probably better than most, if not just about everybody out there at this point.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.